All right, let's dive right in. Today, we are going to tackle one of the most intimidating looking tools in any trader's toolbox, the Ichimoku Cloud. You know the one? It's that indicator a lot of people click on, their eyes go wide, and they just immediately close it. Well, today, we're going to demystify it piece by piece. Because let's be real, when you first throw this on a chart, yeah, it looks like an absolute mess. Some people call it a monstrosity. I've heard a big spaghetti junction. It's just this chaotic jumble of lines and colors, and it can feel totally overwhelming. But here's the thing. What if I told you that underneath all that complexity, there's actually a surprisingly powerful and, dare I say, intuitive system? The whole point of this explainer is to break down that monstrosity into simple, manageable parts that you can actually understand at a glance. So where do we even begin? Well, its full name, Ichimoku Kinko Hyo, literally translates to one-glance equilibrium chart. And that name is everything. The whole idea is to give you a complete picture of the market in a single look. Let's see how it pulls that off. Think of it like the Swiss Army knife for your charts. Instead of cluttering up your screen with a bunch of different indicators, Ichimoku tries to do it all at once. It wants to show you the trend's direction, the momentum behind it, and key support and resistance levels, all in one neat package. Okay, to really get this, we've got to peel back the layers of the onion. So let's just get rid of all the noise for a second and focus on the biggest, most obvious feature first, the cloud itself. And there we go. See, with all those extra lines hidden, it's already so much clearer. All we have left is the price action and this big shaded area that we call the Kumo, or simply the cloud. This is our foundation. So here's the most important thing you need to know. The cloud's number one job is to tell you the overall trend. Super simple. Is the price trading above it? You should be thinking bullish. Is it below the cloud? Then you should probably be thinking bearish. And what if the price gets stuck inside the cloud? Well, that means the market is choppy, it's uncertain. For a lot of traders, that's a no-trade zone. And it gets even easier. The color of the cloud gives you another quick clue. A green cloud suggests that bullish strength is either building up or just continuing. A red cloud, you guessed it, suggests bearish pressure. It's just another layer of that at-a-glance confirmation. Okay, now that we have our foundation, let's bring back two of those lines we hid earlier. Think of these as our momentum guides. They work together with the cloud to give us more specific trading signals within that bigger trend we've already figured out. Now, we're not going to get bogged down in the Japanese names or the math behind them. The absolute simplest way to think about these is this. The blue line is the fast line. It reacts really quickly to price changes. The red line is the slow line. It shows more of a medium-term trend. It's a lot like a fast-moving average crossing a slow one. And right there is our first key signal. When that faster blue line crosses up and over the slower red line, that's a sign that short-term momentum is starting to shift to the upside. It's a classic bullish crossover. And of course, the opposite is true. When that fast line dives down below the slow line, it's signaling that momentum is turning bearish. This crossover suggests that sellers are starting to take control, at least in the short term. So let's see how all of this comes together to build a really complete picture. We can now combine the cloud, which tells us the trend, with these lines that show us momentum, and create a really clear, rules-based checklist for finding good trade setups. So for a strong, bullish signal, you want to see everything pointing in the same direction. First, the overall trend has to be up, so the price is above the cloud. Second, the cloud itself is green, confirming that bullish strength. And third, you get that trigger, the fast line crossing above the slow line. All three together, that's a powerful combination. And for a bearish setup, you just flip the script. It's the mirror opposite. The price is below a red cloud, telling us the major trend is down. Then you wait for that bearish crossover, with the fast line dropping below the slow line. See? It's all about making sure every component is telling you the exact same story. And you know, this is the real magic of the whole system. By making you wait for all these conditions to line up, the Ichimoku Cloud kind of forces you to be patient and disciplined. It helps filter out a lot of the bad signals and really encourages you to only trade when the trend is on your side. But hang on, we're not quite done. There are two more parts to this indicator, and they have this really unique relationship with time. One of them looks to the past, and the other gives us a little glimpse into the future. Okay. This green line, often called the lagging span, is actually just the current closing price, but it's plotted 26 periods back in the past. Its main job is to act as a final confirmation, sort of comparing where the price is now to where it was before.
But in the spirit of keeping things simple, a lot of modern traders just hide this line. They find that the cloud and the two main lines give them plenty of information, and getting rid of the lagging span just keeps the chart much cleaner and easier to read.
Now, this is probably the coolest, most unique feature of the whole thing. The cloud, that green and red area, is actually plotted 26 periods ahead of the current price. This means it gives you a forward-looking glimpse of where potential support and resistance might show up down the road. And that brings us right back to the beginning. When you break it down, you can really see how the Ichimoku Cloud earns its name. It shows you trend, momentum, support, and resistance, all in one glance, helping you quickly see where the market is or isn't in balance. So the final question really is for you. Once you get past that initial, whoa, what is that moment, does an all-in-one indicator like this actually provide true clarity? Or does trying to combine so many things into one view just end up creating more noise? That's something every trader really has to decide for themselves.